Good morning, ladies and gentlemen. Thank you for joining our webinar on virtual banking in Hong Kong today, which is made possible thanks to our sponsors from Temenos. I'm very pleased to see a good turnout today. Quite a number of you tuning in from Facebook, from YouTube. I see that we're joined by friends from not only in Hong Kong, but in Singapore, Malaysia, Philippines, and more. So I hope you guys will enjoy this session we've prepared for you. My name is Vincent, and I'll be your moderator for today. Now, Hong Kong has set the stage for the rest of Asia when it issued 8 virtual banking licenses in 2019, which sent regulators from around the region each to scurry for its own virtual banking framework or digibank framework. With some of the banks having already launched in Singapore, we organized this webinar today to seek to understand the kind of impact that the virtual banks have in the Hong Kong market and beyond, and also to seek to learn lessons from them on launching a new virtual bank. Today, we're joined by Adrian C., who is the chief executive of WeLab Bank, the only homegrown bank in the 8 virtual banking licenses that is issued. Adrian is the second one on the screen. Hello, Adrian. Thanks for joining us.
Morning. Morning.
And we have Andrew Faber, who is the CIO for MOX. MOX is a virtual banking consortium led by Standard Chartered. And Andrew is the third one on the screen, and I guess his friends and people who are close to him call him Andy. His name over there on the screen is Andy. And
Morning.
we have Dr. Frederic Lau, who is the CEO of Airstar Bank. It is a virtual banking consortium formed by Xiaomi and AMTD Group. Hello, Dr. Frederic. Thanks for joining us. And last but not least, on the top of the screen, we have Frankie Y, who is the head of business solutions group for Greater China and Temenos. Now, Temenos is a banking software company with over 3,000 banks and from 150 countries relying on them for solutions, which includes incumbent banks and the new virtual banks as well. Now, before we begin, I'd like to remind the audience to feel free to ask questions, and we'll try to address them as we go along. On to my first question. Now, not many of us can say that we've launched a brand new virtual bank from scratch. And I think that's probably quite a unique experience. So I think it'll be really interesting if the speakers today can walk us through what that experience is like. Maybe we can start with Adrian. Adrian,
Yeah.
the floor.
Thank you, Vincent. I would say building a bank is a very exciting process. We built WeLab Bank in just over 400 days. We from scratch to a public launch back in late July this year. So during that period, those 400 days, it's social unrest, COVID-19 pandemic season, all very disruptive in the environment. But we launched the bank in late July, and also what's more exciting is that after 10 days, we've got over 10,000 applications, which is very exciting. But numbers of customers is not just the interesting part. I think what we see is that there are a lot of observation that's quite interesting. For example, 60% of our customers actually have more than 2 products with us, which means they really like trying out our products. We are the first bank who launched the first saving product with a community themes. So which means the more people participate in the deposits themes, then the interest rate will actually go up. But more importantly is we also have our WeLab Bank debit card, which deliver 3 key themes. One is convenience, because once the customer actually open the bank account with WeLab, there is a virtual card that we can use in the app, which help a lot because these days in Hong Kong, the postal service were impacted by pandemic. So only 2 postal delivery a week. But with a virtual bank card, people can go online to do the online purchase, and there's no waiting for the physical card. But having said that, we are the first bank who actually launched a numberless card in the market. Why is it numberless? Because we think the security features actually will help when people were using it in a restaurant. the card will disappear from your eyesight, but yet all the details are there. But more importantly, I don't know if you like. I love this. This is the holographic design of the card. It means it actually changed the color in the different shades of lights during the day, which is very great. So I think despite the difficulty of the past 400 days, I think building a bank is actually very exciting because this is the best time to prove to our customers how virtual banks can actually change the banking experience.
I think it's interesting because at the end of the day, there's nearly no time in the recent decade where it would be more challenging to launch a bank in Hong Kong, and this is the time that you guys are launching a bank in Hong Kong. I do think the numberless aspect of it, besides just security, is quite sleek. I like how it looks. So maybe we can move on to Andy. Maybe Andy, you can share with us what the experience is like from a technology point, from launching, from hiring people, a brand new bank, especially one that's also tied to an incumbent bank brand as well. Andy, you have the floor.
Thank you, Vincent. Good morning, everybody. Yeah, it's a hugely rewarding experience, and especially when you start to see the real fruits of your labor and and the team's labor and the organization's labor, and that is in the hands of customers. So it's hugely rewarding. This is unfortunate. This is my second digital bank I've been involved in building. But I must say the first one was Time Bank in South Africa. But I must say this one, I lived in Hong Kong for 5 years, and having a product that's out there with your friends, and they're giving you feedback, and they're giving you instant feedback on that's something I'm extremely proud of. But getting there, as Adrian mentioned, getting there has taken tenacity, taken resilience in the backdrop of COVID. It's tremendously difficult and challenging. But I think what we've done really well and what we have is a great team, and a great team that is focused on that execution. I think there's lots of opportunities in the market to build digital banks. There's lots of good ideas and good concepts, but the ability to take that idea and take that in a year or just over a year and produce and build and launch a digital bank comes down to the team that does that. And we're very lucky. We have built a new technology stack from the ground up. We've got really great ways of working, but we're also supported by a parent that is Standard Chartered with 160 years of banking experience in Hong Kong. So we're able to pull on that banking expertise. So we've really got a great balance alongside the leverage we have with our JV partners as well, and our partnerships there are very attractive in terms of what we're going to be offering to our customers. Thank you, Vincent.
Cool. Thank you for that, Andy. And I think, the rest of Asia, particularly the rest of ASEAN, is watching with great interest because a lot of them are also trying to bid for their own digital bank, trying to understand some of the strategies that you guys are doing. So I think a lot of what you guys do will kind of ripple into the rest of Southeast Asia in the near to medium term. Maybe next we can go to Fred. Fred, do you have anything to add in terms of your experience in launching Airstar Bank in Hong Kong? Fred, I'm afraid you're muted. There we go.
Yeah, even you open a mom and pop a grocery store, and there's tons of things you have to do. And now we are establishing a bank from scratch. Now let me just cut to the bottom line, and without beating bushes. And now I'll summarize. There are 3 pillars in establishing a brand new bank, and the first is people. We need to put together a very good team. That is the number one test when we first try to establish the bank. And without people, you can do nothing. The second pillar is the systems. Now, with those capable people, we are able to choose the right systems to build. And during the implementation period, and because the people we hire, and so our implementation process is quite smooth. And the third pillar is risk management and policy and procedures. And policy and procedures is just like a book of laws, and in a jurisdiction. And without the book of laws, and a lot of things cannot be implemented properly. So those are the three things I summarize. Now, back to the people issue. We hire people more with the banking background. Now, there was a debate whether we should hire more tech people rather than banking background people. And and then finally we decided, and we are building not a tech firm, we are building a bank. So ultimately we hire more banking background people than tech people. And that might be the other people might have different opinion, but this is what we did. Thank you.
Thank you, Fred. I mean, Andy being from a tech background, I'm sure you will have a comment or two. I mean, I think last week when we did a chat with one of the advisors for Razor Fintech, who's doing a digibank in Singapore as well, the comment was kind of like, there should be a good balance between tech and also banking. It's good to have people coming up with fancy ideas, but it's also good to have some adults in the room as well. Well, why don't we move on to Frankie? Frankie, I'm sure Temenos has done some work with some of the virtual banks. Some of the team may have experienced some aspects of launching a virtual bank in different markets. Do you have anything to share with us in terms of that experience, Frankie?
Yeah, definitely. Thanks, Vincent. And I'm speaking from a software provider perspective. It was an exciting experience, and I will put it as a rewarding journey because there are lots of learnings throughout the passage. And remember last year or a year before, we have been talking to most of the applicants, about 30. They talk about how they want to build a bank and what kind of software system they require from us. And we walk through the journey as early from the day they start to apply the license to all the way, like Adrian launched the business almost a 2 years time. And I think looking back, there are three key takeaways, I would say. This is a totally brand new way of thinking. It requires a very open mind, and is an arena where is an uncharted water for banks, software providers, and even for consulting firms. So we have to keep our mind open to find new ways of doing things. And I observe the industry has shifted from product-driven to customer-centric. And product and services from bank are built around the needs of customer, and it's no longer a fixed set of products that you can roll to the market. And second, it moved away from transaction-based to experience-focused. Now we are talking and emphasizing how simple and convenient the customer can interact with bank. So this requires a whole new way of design in the software system, which supports bank in offering their services. Then about the people. I've been talking to so many guys, different backgrounds. We keep communicating because we used to talk most to the bankers, and VB applicants are having a wider diversity who are non-traditional financial service provider like telecom, technology giants, investment firms, e-wallet provider, and even I remember there is an applicant from the entertainment business. And we listen to the plan and we communicate our idea of solution. More important, we keep evolving our solution design. I think at least we have generated 10 to 15 different versions, how we architect the solution so that we can meet the new requirements of virtual banking in Hong Kong. So I would say we are crafting together with our client, virtual bank, and prove its work and get it up and running. The last one is, I think virtual bank, it also asks for speed. I know most of the VB intends to go live 6 to 9 months. And normally a banking project, I think Andy should agree, it will take more than a year, a project time frame normally. And I'm thinking how we can deliver and pass all the testing within such a time window itself is a huge challenge. So what we do is we leverage on our global experience on the digital banking. We have clients from Europe, Australia, and also in the APAC regions. Some of them are the first digital bank in the country or region. Say, example, Paved Bank in Israel, Open Bank in Spain, and also closer to us, O Bank in Taiwan. So we define a set of minimal viable products and leveraging the experience we have from other part of the world to help bank up and running in a short time frame. So I believe this experience really will benefit for virtual banks going to roll out in the rest of the APAC country. Thanks, Vincent.
Thank you. And I can see the rest of the panelists nodding and smiling when you say virtual banks want to launch in a fast and quick manner. So we have a few questions from the audience already, but later I kind of want to go back on the topic of talent where Fred said it's probably better to have a composition of bankers versus tech. So that's something that I want to dive into. But let's move on to take a question from the audience. We have a question here from a person by the name of Shang Ong. His question is, what are the problems that you see in the financial ecosystem in Hong Kong which led to the need for a virtual bank? I think the other dimension to that is that, Hong Kong is a financial hub and there's a large number of banks, right? And it's not exactly a huge population, probably around 7 million people. So I guess the question is, where's the gap and what role does virtual bank play in this? So anyone is welcome to take this question. Who would like to go ahead and take this question? Sure.
Yeah, Vincent,
Okay, sure.
maybe I'll start and
Right, go ahead.
panel can supplement. In Hong Kong, while we only have 7 million people, a number of the existing banks actually serve those who have more wealth than the others. So our goal at WeLab Bank is actually to help the underbanked segment to take control of their financial journey and while they're having fun. And therefore, as I mentioned earlier, a lot of our target segment, they may not have a lot of time to go to the branches to wait and also line up and to get the transaction process. What we're offering is they can do banking 24 hours, 7 days a week through the mobile phone. And at the same time, since we don't have the fixed cost like a incumbent bank where they have branches that they have to pay rental, they have to also man all these branches, all the labor costs involved. A lot of our investment are just on our technology platform, which is very stable and reliable. Those fixed costs that an incumbent bank that actually incur, we actually be able to translate that into some of our fantastic offers so that the unbanked segment being underserved by the incumbent bank, they can enjoy banking and also help them to manage the wealth along the financial journey. Thanks, Vincent.
Thank you, Adrian. So I think Fred, you wanted to go next, right? Fred, what are your thoughts on the question in terms of the need for a virtual bank in Hong Kong?
Now, I guess the HKMA, the regulator, when they first put up the ideas, asking applicants to apply for a virtual banking license, and they mentioned that there are at least a couple of gaps in Hong Kong. And number one is the SME and retail customers. They are very difficult to get lending services, to get loans from traditional banks. And in Hong Kong, besides traditional banks, there are a great number of money lenders. Those money lenders charge retail customers and SMEs very high level of interest rates. A lot of them charge over 40%. And now traditional banks, just like Adrian said, and they are just try to serve the better customers. There are a great deal of customers, SMEs. They need money, but banks don't want to lend to them. So with virtual banks, we can provide the lending services to the retail to larger segment of retail customers and SMEs, and just like Adrian just said, and we can, because of the cost saving, we can provide a lower interest rate to those customers, to those borrowers. Now, the other gap is traditional banks in Hong Kong. They don't. They really target the rich people and with money, and in certain remote areas, and the banking services is lacking. And some large banks, they even withdraw their branches from certain not so, I guess, defined as wealthy areas. So the banking services really is, we have a lot of underserved customers in Hong Kong, and with virtual banks, and I think we can fill the gaps and to provide services to those underserved, and also provide lending services to those very difficult to get lending, to get loans from traditional banks.
Thank you, Fred. So what I'm sensing from both Adrian and Fred is that number one, the problem is that while the Hong Kong population is banked, they're unnecessarily provided with the services they need. And the second dimension is that because it's very technologically focused, the cost of running the bank is not as expensive as an incumbent. But I also kind of wanted to challenge that notion a bit later when we're done addressing the question, is that the kind of conventional thinking that, because our bank is running on the cloud, because we don't have a branch infrastructure as much as incumbents, therefore our cost is lower and we can pass the savings to our customers. But we're also seeing reports indicating that some of the neobanks in other markets are having higher cost to income ratios compared to the incumbent banks, because the cost of customer acquisition is really expensive at the start. So is there really a saving is a question that I think we want to jump back into. But before that, let's pass over to Andy for comments on this question.
Yeah, thanks, Vincent. I mean, I think for us, there's two main factors here at play. One is that Hong Kong, albeit a relatively small population, is a very profitable market. The second one is the world is changing with technology and innovation, and there's a wave of disruption happening across the world. And with these two things coming together in Hong Kong, then disruption becomes possible. Mox, I think we're obsessed with our customer, obsessed with that delivery delighting our customers. We have our own numberless card, and we're obsessed with the creativity and the design and the experience that our customers will get through our app. And we're integrated into the lives of our customers under a new ecosystem. We've got very strong partnerships I mentioned previously with C-Trip and PCCW and Hong Kong Telecom. And we call ourselves and like to know our customers as Generation Mox. So Generation Mox are curious, they're connected, they're digitally savvy regardless of an age. I mean, I was just reflecting what COVID is, the acceleration of COVID that has brought into this area. Who would have thought grandparents, for example, are on house party? Who would have thought children would be taking lessons on Zoom? And this acceleration of technology and digitally connected, savvy population is where Generation Mox is going to play.
Thank you, Andy. And I think the notion that, being digitally inclined is not a question of age any longer. I feel like that is a very beaten to death narrative that a lot of banks have been, hammering on for years. Like, oh, we're targeting the millennials, we're targeting so and so. But I think we've reached a point in society where, digital is just the norm, right? But how do you improve upon that digital experiences? So I'm wondering, Frankie, if you have anything to add to this question over here on the need for a virtual bank in Hong Kong. If not, then we can move on to the next question. Anything you'd like to add, Frankie?
Not much. Maybe we move on.
Okay, cool. So I just want to quickly jump back to the whole notion that virtual banks are inherently more cost efficient and therefore they can pass the cost onto the customers. Is that a true assumption? And anyone who's welcome to take that question. Adrian, Andy, Fred, would you like to address that?
Yeah. Well, I'll let Fred talk first.
Okay. Well, I think virtual banks, just like four of us in Hong Kong, we just launched our business in Hong Kong. And at the very beginning, we need time to accumulate customers. And during this stage of the time, and we need to probably put up more marketing dollar into it. But when we accumulate a certain number of customers, when we get to a certain critical mass, and we can rely on the technology, for example, AI learning, cloud calculation, those techniques to help us to reduce cost. From two areas at least. One is the credit underwriting area, and another is a customer solicitation area. So I think when we get to a point we have a sufficient amount of customers, and we can rely on those ways to reduce cost. But before that, I think some of the comments, some of the observations may be right, and we probably need to spend some marketing dollars to acquire customers, and that's my view.
Okay, thank you for that. And Adrian, you wanted to add something to that?
Yeah, I would like to supplement. I think, as I mentioned at my opening speech, while we get 10,000 applications in the first 10 days, it's not the numbers that count. At the end of the day, it's whether we can actually meet the customer's needs. So there are some metrics we can look at. For example, over 60% of our customers have at least two or more of our products. our GoSafe deposit, we have close to 10,000 transactions already. 60% of our online transaction on the cards are actually happening online, which means what we are offering are actually meeting our target segments behavior these days. And what's even more exciting is we assuming it will be the 18 to 40 younger generation who will be using virtual bank, but it's not quite true. Age is actually not a limit of being tech savvy. Our oldest customers is actually 83 years old, and not just 83 years old. He actually that customers actually managed to open the account in 5 minutes. So that actually opened a new sort of segment or population that the bank can target at, and as long as they enjoy what we are offering, those repeated and engaged customers, those are the ones who would actually generate profitability for us. Thank you, Vincent.
Thanks, Adrian. So if there's no one else who would like to add in, we can move on to the next question. Anyone would like to chime into this? No?
Yeah,
Okay.
Vincent.
I mean,
Yeah, I'd like to add something.
Go ahead, Frankie.
Yeah, I think I look at profitability. I share from a view as a provider. I think when we talk about profitability, first we have to increase the sales and also lower the costs. How we increase the sales? Bank has to differentiate from the competition. And how we can differentiate in the competition, the more you spend on the innovation, that helps you to differentiate. And on the cost side, we need to look into the efficiency, how we can lower the cost-income ratio. The lower the ratio, the better the efficiency. So there are so many options we can improve that. And I see there are 3 key technology enablers which can help virtual bank to improve on the profitability. And like Fred also mentioned about how we make use of the data and also the intelligence out of it. I think we need to understand the needs of the customer, their behavior, like and dislike, so that we can capture and also derive the actionable insights and deliver values to the customer. So that will help to increase and more targeted to your customer needs. That drives the higher digital sales. And next, to the technology platform, the enabler is talking about the cloud. What clouds means to me, really, it means to me the agility and the simplicity. And now they're holding a massive quantity of data on-prem, and infrastructure is no longer economically efficient for banks. Because given the dynamic market situation, we need an elastic scaling to cope with the increase and decrease in data. And cloud offers you the pay-as-you-go model, which enables bank to be more efficient. And on the simplicity, virtual bank should have a laser focus on the banking business and leave it to the provider with expertise in managing the data, hardware, and software for you. And the last one is, now we need to increase our competitiveness and foster the innovation. And virtual bank needs to collaborate with a wider fintech ecosystem and to connect with other systems. The standard and the common protocol, the API, is a key pillar for system to communicate. And it will help to foster the innovation in the products and quicker time to market, and again, achieve a higher percentage in the digital sales. So that's about my view on how we can help the virtual bank in driving the profitability.
Yeah.
Thank you, Frankie. Andy, would you like to add anything before we move on?
Yeah, for sure. Thank you, Vincent. I mean, echoing much of what has been said. I think technology. Let's be clear. Building a bank, launching a bank isn't a cheap exercise. Right? It is an investment, and it is costly. Technology, however, is a huge enabler. Everyone's mentioned it. It's a huge enabler for the future, for the next few years, 5 years, and ongoing. And we at Mox have built a tech stack from the ground up. It is cloud-based. It's cloud first. It is a microservice architecture, which means we can break big problems down into smaller chunks. What does all of that mean for a customer? It means speed. Speed is at the heart of what we can achieve, and we're robust, we're stable, we're secure. But on top of that, we will have, and we have, speed to change, speed to pivot, speed to get into a different direction, whatever that may be. Ability to learn, test, and move forward. And at the heart of all of that is our goal of winning the customer's heart, of a beautiful, delightful experience for our customers that really kind of nestles in at the heart, and with that, customers, we'll keep loyal customers with us, and over time, then we grow our number of customers. Now, clearly, we have a robust financial plan, but actually, we believe if we get all of those factors right, that will win through speed, experience, backed by the Mox fresh brand, and backed by Standard Chartered with 160 years of experience in Hong Kong, banking experience in Hong Kong. That blend of technology and banking will win through.
Thank you, Andy. And I think we have a question from the audience here that's directed to you. This is the wrong one. So we have a question here from Chuan Ji, who's kind of asking, how Mox will impact SC's existing business. How do you kind of differentiate, right, from your incumbent business and this new venture? I guess also the kind of follow-up question that I have, because I'm also observing in other markets where incumbents are looking to also set up a virtual bank as well. So, a follow-up to that is also what can be achieved with a virtual banking license that the original banking charter can achieve should incumbents pursue this kind of new license?
Yeah, thank you, and thanks for the question. We very much see Standard Chartered and Mox complementary to each other. You've heard me talk about how Mox is leveraging the experience of Standard Chartered, but in terms of our bank, we see our offerings as a complementary addition to the market. We have had the opportunity to build and create a new business architecture, not just a technology architecture, but a business architecture. And that business architecture has given us the opportunity to look at different recruiting and hiring different types of talent into the team. We have hired heavily on tech talent. We've done that because we believe that technology is a key enabler. So it's given us that opportunity, and honestly, I think over the next 5 to 10 years, if some of the incumbent businesses don't change and react, then they will be disrupted. And so while we're complementary, I think there's a recognition that this has helped also push digital agenda within Standard Chartered as well, and maybe a more aggressive digital agenda. So they definitely can work together. Just touching on your second part of your question, Vincent. My experience I moved to Hong Kong about 5 years ago. My experience in opening a bank account when I came here wasn't great. I had to go physically to a place. I had to go at a time when it was convenient for me, and that was generally a time when other people were there as well. So that meant big queues. And thirdly, the process to do that account, I didn't have all the paperwork I needed. It just was quite an uncomfortable and long-winded experience that shouldn't be. And in a world now where we've got COVID, that feels pretty archaic. With Moxie's 24/7, you can open an account within under 4 minutes. Our record is about 3 minutes, 25 seconds, but you can do all this from the comfort of your own home. So we see that from a why spin out is we can bring the best of both worlds to our customers. We can leverage the brand, we can bring in some great partners, we can build out a new tech stack, and we've got this fabulous business architecture that brings us back to speed, experience, and brand.
Thanks, Andy. So let's move on to the next question. And I think this question links back to some of the things that the panelists has said earlier, right? I think both Adrian and also Frederic has commented that one thing that virtual banks are doing well is to address some of the segments that the incumbent banks have not traditionally been able to serve well. So where the incumbent banks typically do excel is in the high net worth segment, right? That's where their key is. So one of the audience over, Vivian, is asking whether you guys see virtual bank eventually moving into that turf of high net worth segment in Asia in the near future, and if so, how can virtual banks go ahead and do that? Adrian, Fred, would you guys like to take this question?
Let me just say at the very beginning, we are not targeting high net worth customers. So far, that's our business strategy for the beginning period.
Thank you, Fred. Sweet and simple answer. Adrian, what about WeLab Bank? Are you guys looking into the high net worth segment eventually?
I think we will start looking at those underserved customers as our first priority, because they are the sweet spot where we can actually use technology to serve them better from a bank perspective. I think the high net worth individuals, as time goes by and they realize the convenience and the artificial intelligence that we can provide from the background, they will gradually open up, and as that happens, we are already there to serve them when they actually feel comfortable using virtual
Thank you, Adrian. And Frankie, do you have
Thank
anything to add? Like from the clients you've worked with, have you seen instances of them using technology to be able to kind of cater to a high net worth kind of group, or is that something that a lot of the virtual banks and DG banks aren't really looking at in the market?
Yeah, thanks, Vincent. Talking to different virtual banks, I think in the first step and first stage, they target the younger generation, or we call the digital native, because they are used to this kind of communication. And also, I mean, they also target with the existing segments, the retail segments, who are also technical savvy. And the third area is the financial inclusion. Those underserved or unserved by conventional financial institution. And I observe also this is in the second stage to plan to go into the wealth space, because it is very normal. I mean, from the development of the financial industry, when a bank has a strength on the retail segments, the client base, they will offer the high net worth services to the high end of those retail segments. So I think this is coming on the second stage of their rollout. And back to the technical savvy question, whether it is a must for virtual bank. Actually, I don't agree, because you can see how many seniors now using WhatsApp and Zoom, and given the pandemic. And also Adrian shared about a senior opened an account managed within 5 minutes. And I think this is more how effective and how we technology makes life easier and banking easier. And all this boils down to the education and the culture we are cultivating for this digital age. So I think this is what virtual bank has the options to open to different demographics.
Thank you for the insight, Frankie. And Andy, from your perspective, do you see a scenario where Mox will move in onto SE's turf of more high net worth individuals, or are you still kind of really focusing on developing the right kind of technologies and digital solutions for the underserved market right now?
I think, as I said earlier, Vincent, we see generation Mox. They are people who are connected. They're digitally savvy, and I think, as has been said, the COVID has accelerated this. We're seeing examples of anybody of any age using technology, and it's no longer a prohibitor. So our target is generation Mox, people who want to be connected into our ecosystem, and that could be at any age. How we develop our products, we initially with deposit account and a card and a credit card, and how we develop our roadmap, we'll work through as we know more about our customers and what our customers' needs are, and that's how we'll move forward in terms of our roadmap.
Very cool. So at the end of the day, it's just as long as they're looking for a better digital solution, right? That would be your customer base. So I want to move back to the earlier conversation about talent. And I remember when the licenses were first issued, there were a scramble for talent. Some were like, okay, we need to look overseas. We need to hire the ex-bankers. And we also see a lot of movements in top level positions, right? Like we see press announcements, this virtual bank has hired this top guy, and the next month's like, hey, where's that guy now? So there's a lot of talent challenges when it comes to virtual bank. So few parts question. The first question is that for our friends who's tuning in from Malaysia, tuning in from Singapore, who's also looking to set up the digital bank, what kind of advice do you have for them in terms of talent acquisition, talent management? And second one is back to the notion that Fred brought up, right? Fred said that the composition should be a bit larger towards bankers because they are running a bank. So that second part of the question is to look at what is your view on the composition of talent. So two parts question. Anyone can go first. So who would like to?
I'm happy to start.
Go ahead, Andy.
Yeah, thank you. I think the advice, the experience is you first need a very, very solid core team. And that is a combination of the banking expertise, technology expertise, leadership, adults, as you referred to, Vincent, but you need a very, very solid core team, and around that, an ecosystem of support, and that ecosystem of support can, in our case, come from the parent company. It can come from our JV partners. It can come from our people partners who help us with technology expertise, or it can come from software partners as well. So there's an ecosystem of support that surrounds you. I think the second part is then diversity, and diversity. We've got over 20 different nationalities in the office, so there's a nationality diversity. The Hong Kong virtual banking initiative and drive is not new around the world. A few other countries have been doing this for quite a while. And there's great talent there, whether that is, again, banking talent or technology talent, but there is great talent. And we've actually been able to bring people from other countries to join on our endeavor of building and running a virtual bank in Hong Kong, which have been great additions to our team. But also diversity, not just national diversity of thought and mindset. And what do I mean by that? We have people, we have pessimists in our team, we have optimists in our team, we have devil's advocates, we have people who need the facts, we have people who are very creative. So there's a real spectrum of diversity into that team. That means we are building a bank. We are a bank. We're not a technology company. Technology is a key enabler, but we are definitely a bank, and we've got a complementary of skills that you need, whether it's around controls, whether it's about compliance, whether it's about the latest innovation in tech. You need all of that diversity to help bring that together, and then that ability to execute is fundamentally key to how you then bring that team together and grow that talent. That would be my main points of advice.
Thank you for that. And yeah, I guess diversity really helps you to see things from different angles, right? If you have everyone agreeing in the meeting room, then it's like you don't know if you're going the wrong direction. So, Adrian, do you have anything to add in terms of the two questions I asked earlier? Just to recap, number one is advice to the other regions that's looking into it. And number two is the composition in terms of the hires. Go ahead, Adrian.
Sure, thanks, Vincent. I think it's important that we always look at the fit of the team members in terms of the skill set. For the role that they play, they need to know their stuff. But more importantly for WeLab Bank is that we need to have a fit mindset, because when we are moving so quickly, when people coming from different background, whether it's from a traditional banking experience or a tech mindset, we need communication. We also need people who can work together. So at WeLab, we actually has a very strong agile culture, which encourage people, or we only hire people with growth mindset. And this culture actually allow us, as a group, while we only launched 7 years ago, but as of today, we operated in multiple countries and we have 46 million users already. So I think at the end of the day, we look at growth mindset and also a strong culture that pull all the people and leverage the strength, so that we can get 1 + 1 can be more than 100. Thanks, Vincent.
Thank you, Adrian. And Fred, I think you've already added your view in terms of the composition. So maybe you can go ahead and share some advice for the aspiring digital banks and virtual banks on talent management and talent acquisition. You have the floor, Fred. Go ahead.
Yes, I think what Adrian and Andy said were right. And what I try to supplement and maybe with our experience is, and our C-level, meaning our core team, they all have strong banking background. Why is that? Because during the implementation, during the organization period, we had to deal with a lot of issues. Those are regulatory issues. And without a good background in banking, without good understanding in the regulatory requirement, a lot of things we're unable to proceed. And because the date of our launch is subject to the approval by the regulator. So during the organization period and the system implementation period, we need the experienced people to deal with the regulators. And now our more junior people are the younger ones. These group of people, and then some have a banking background, some have the tech background. And as Adrian just said, those are the people with strong growth in mind. And we have this combination of younger people and the more experienced people. And so during the implementation period, we found this is a good combination, and the result was pretty good.
Okay, thank you for that, Fred. So I'm afraid we don't really have much time left. So probably ask 2 more questions and then we probably have to wrap up. So one question that I have for the panelists, because recently I read a study from Nielsen's that indicated 82% of the consumers they surveyed do not trust virtual bank for loans. So I mean, obviously loans is a big product for virtual banks to be profitable down the line. So my question is, is this true in your experience? If it is true, how can virtual banks earn the trust of consumers to actually be able to take up their loan products?
Vincent, just a quick answer. And
Sure.
I have not read the report, so I don't know the details. But last year, PwC did a survey. PwC surveyed Hong Kong, Malaysia, and Singapore. And yes, the percentage of not trusting virtual banking and digital banking, the percentage is quite high, but it's in the 30s. It's in Hong Kong, I think it's 38% not trusting virtual banks, and in Singapore and Malaysia, and the numbers are lower, but it's in the 30s. So I don't know 82. I have not read the report, so I'm interested to read the report and see how the 82% is coming up.
The reports often, you got to look at the sample size, you got to look at the way the questions are phrased. But I guess like the reason why I brought it up is just to also understand what is your experience with the customers, right? Whether you guys are seeing a distrust for lending products, or that's not true in your case. Adrian, and how is your experience with WeLab Bank?
Well, I think before I get to the bank side, maybe I'll talk a little bit about WeLab. When we first started WeLab 7 years ago, it was an online lending business through mobile. Our sister company, WeLend, is actually now the second largest lender in the market. So I think there's track record that we have. And more importantly, when WeLab Bank offer loan facility, we are governed by the Hong Kong Monetary Authority, the regulators. There are a lot of regulations on customer data, security, and all that. So that would be our advantage of offering a loan facility through a virtual bank. So I think we can change the mind of those 82% respondents on that side.
I think in your case, it's absolutely not true, right? I mean, that's the kind of DNA of WeLab and how you came to be. So, right. Yeah, I mean, I guess it really depends on the sample size. And Frankie, from your experience with your customers, what have you seen?
Yeah, I'm myself being a customer as well. And when I look into the trust, this topic, I think on the lending, I think we concern how the credit decision is being made. And so with that, I mean, the basis is important to bring a transparent and explainability on how the credit decision is made. And nowadays we can see all the AI is getting ubiquitous, and you find its application in deriving the credit worthiness of a loan applicant. But typically the AI operates as a black box, offering little or if any discernible insight into how they reach the decision. Say, what is the scoring algorithm, what factors contributing to the score. So it is important to provide transparency into this decision and helping bank to explain clearly in a plain language to bank customers and the regulators how AI-based decisions are made. So this helps to gain trust of your customer. And explainable AI really can help to provide this transparent, fairness, and also non-biased view of decision making. And I believe this can help to earn a better trust from the customer.
Absolutely. I think there is no instance where transparency is a bad thing. Yeah. Andy, do you have anything to chime into this topic?
I'd really just echo, I think, what has been said, that we're in the largest one of the largest financial service centers in the world, and the regulation around there is understandable, and it builds out security, resilience, and everything we need around being a virtual bank. But we're also in that business of earning trust, right? I think that is absolutely fundamentally key to a virtual virtual bank. To what Frankie was saying, I think the transparency is fundamentally key as we move further forward. Our research actually told us something different. I'm with the guys on the actual research you refer to, so it'd be good to see that, because we actually had a different view on the trust with virtual banks. So no, I think we're building out, earning trust. We're proud of our heritage. That again, I think demonstrates years of experience in this market of lending to customers.
Thank you, Andy. So with that, let me ask the final question, and then we'll wrap up the session. So the final question is, it's been quite a journey for all the virtual banks in Hong Kong so far. Now that you've launched, now that you've pushed some initiatives in the market, how has the virtual banks in Hong Kong shifted the financial services landscape in Hong Kong and beyond? And then just maybe some final closing thoughts if you have anything to add. So maybe we'll start with Frankie on the top, and then Adrian, and then Andy, and then Frederic. Frankie, you have the floor. Go ahead.
Yeah, sure. Thanks, Vincent. I'd like to look at the shifts from three angles: customer, bank, and the whole financial industry. On the customer side, I think the behavior is changing, and customer can access the bank anytime, anywhere. And customer is receiving more intuitive and personalized services because virtual bank can harness data to improve their offering. And customer got more choices, more innovative products, better service, simple, convenient, even paperless, cashless. And at the same time, the customer is adapting and redefining a new way of banking. I would say it is really integrating banking as part of their life. And on the bank side, due to the nimble in nature, can provide faster product rollouts to seize the market opportunities. And bank has more options in terms of how they offer and promote services to the customers. And definitely, it will be a more customer-centric focus. And bank has lesser dependent on human to operate. There's more automation. And banks will be more open and seek for collaboration with third-party providers in a wider fintech ecosystem. It's a mix of collaboration, and at the same time, they compete. I saw some new terms called competition. And finally, on the financial industry, I think it's also one of the objectives from MA. They want to introduce a positive competition to both incumbent and new bank, and also want to foster the innovation and effectiveness in offering banking services. And under this pandemic, we are really under an unique situation where it accelerates the digitalization. And a major shift in the mindset is necessary to adopt this new way of banking and thinking. So for virtual bank, we offer seamless experience to win the customer, to unleash the power of data to serve right the customer, make your operation agile and run your business, and keeping an open and collaborative mindset to the wider fintech ecosystem. And this is what I would say summarize a modern technology solution should provide, and to enable virtual bank to stay competitive in the total new landscape. Thanks, Vincent.
Thank you, Frankie. Now let's move on to Adrian for some closing thoughts and his views on how virtual banking has shifted the financial services landscape. Adrian, please go ahead.
Thank you, Vincent. I think it will go back to WeLab Bank's main objective. There are three. One, we want to introduce financial inclusion to the Hong Kong market by leveraging the technology so that we can introduce some new banking services and idea to the underserved segment at the moment, but it could expand over time. I think we proved it in some of our innovative product like the GoSave community deposit idea, our virtual bank card, debit card that is available once the customer actually open an account and it's already in the app. A lot of the things what we're trying to address are to address the customer's pain points, but at the same time give them the convenience and also provide them the trust via all the security measures that we have in place. For example, the multiple cloud platform, all these important things to the customers. And once they actually experience it, there's no way back, I believe, because once we have experienced the new banking experience going forward, I think customers will actually like the convenience, the security, and also all the benefit that they can gain through the financial journey. Thank you.
That was lovely. Thank you, Adrian. Andy, do you want to chime in on the changes you've observed in the landscape and some closing thoughts? You've also got one fan over here who's happy about the impending launch.
Thank you, Francis. Yeah, I mean, competition, healthy competition can only be a benefit to all customers. And if you think about the incumbents, their acceleration towards digital, seeing the challenge of the virtual banks is only a great thing or an advantage for all customers. I think in the industry is becomes more diverse, becomes more resilient, and that again is only a better thing for customers. The HKMA through this, the regulation through this experience will take a number of lessons and lessons learned, and we've had very open conversations with feedback as well around the regulation and reg tech. Innovation in regulation will build. We've talked about talent. Hong Kong historically, I don't think has had a real fintech, a big fintech population. This is definitely driving more and more tech talent with experience in technology and in banking. And coming back to then into Mox, we commit to building a secure, reliable, safe, trustworthy bank. Number one. Number two, a world-class, delightful customer experience. And I think, as Adrian was saying, once customers feel that, once they see and can touch, I've already got a number of friends and family who've come back with great compliments around we're not going back. I'm staying. It is a different experience and an enjoyable experience than their previous experiences. So changing the lives and having that real impact to people is a part of how virtual banks are changing the industry. Thanks, Vincent.
Thanks. I like how when we talk about the kind of dissatisfaction that we have with Incumbent, it's become a shared human experience that everyone can just universally agree upon, and that's really the aspects that virtual banking can try to step in. Fred, do you want to add in some final thoughts and the impact you've seen from virtual banks?
I'll just supplement with just 2 comments, just 2 points. And number one, our virtual banking license is conditional. One condition is virtual banks have to use innovative ways to operate. And that means we have to use AI, we have to use cloud calculation, we have to use technology to run our business. Now, if we believe using those innovative way can improve our customer service, customer experience, and you will see with time, and customers will more and more gradually into us. And now my second point is the virtual banks existing already push the traditional banks to make changes. Just last year, the traditional bank, a lot of traditional banks in Hong Kong already lowered their servicing fees, already waived some of the servicing fees. And that is what we already have seen in Hong Kong. And I think with time, I think the existence of the virtual banking industry will probably, to a large extent, to change the landscape of the Hong Kong traditional banks operations and the way they operate. Thank you.
Thank you. With that, it leaves me the great honor of thanking all our guests for joining us today, taking time off their busy schedule to share their insight with us. Also to thank the audience for tuning in. I saw that there's over 600 people who registered, and I have to apologize that we're not able to take all the questions because we only have so much time. But we hope this session has been fruitful for you, and do consider subscribing to us on YouTube to be kept posted with content like this. That's it from us. Thank you, ladies and gentlemen, for joining. Hope you have a great afternoon. Take care.